Gold went from $35 in 1970 to over $3,000 today. But does that mean you should buy now? Or have you already missed the boat? This comparison reveals whether gold actually protects against inflation or if it's just the dollar losing value. Nominal numbers lie. Everyone sees gold's 8,500% gain, but ignores 50 years of inflation eating the dollar. A steak cost 20 cents in 1910, now $12. The dollar lost 98% of purchasing power. So is gold gaining value or is the dollar becoming worthless? Most don't understand this difference. Media shows scary charts without context. Advisors call it an inflation hedge without explaining. Meanwhile, your savings evaporate. Understanding real versus nominal prices changes everything. This isn't about gold. It's about dollar devaluation. Nixon ended dollar-gold convertibility in 1971. Gold was locked at $35 for decades, then exploded to $850 by 1980. That's 2,400% in 24 years, 9 years. Adjusted for inflation, that $850 equals $3,000 today. Gold responded to stagflation and currency devaluation. But what happened next crushed investors for 20 years. Volcker raised rates to 20%, killing inflation. Gold collapsed from $850 to $251 by 1999, a 70% decline. Booming stocks made gold irrelevant. In real terms, gold lost 80% of value. Experts declared it dead. Central banks sold reserves. But reports were exaggerated. The millennium would bring gold roaring back. The 2000s brought gold back. Iraq war, weak dollar, and crisis fears converged. By 2008, gold broke $1,000. The Great Recession accelerated demand. By 2011, gold hit $1,900. Central banks began buying aggressively. Even at $1,900, it hadn't surpassed 1980's inflation-adjusted peak. Gold fell back to $1,100 by 2015. 2020 to 2025 saw true new heights. COVID spending and money printing sent gold soaring to $3,300 plus. That's 50% higher in just 14 months. But here's the key. In real terms, gold costs the same as 1980. All that appreciation just kept pace with dollar devaluation. Central banks buy at record pace, diversifying from dollars. Gold isn't a short-term inflation hedge. It's a decades-long currency hedge. Timing matters enormously. Buying peaks meant years of losses. Gold produces no income, just preserves purchasing power. 1 ounce bought a nice suit in 1980, still does today. Are we at a 1980 peak or 2000 opportunity? With record debt and money printing, experts see room. But timing is everything.